Britain's central bank on Thursday raised its key interest rate again, but toned down the pace as inflation shows signs of easing, mirroring action by the U.S. Federal Reserve and European policymakers. The Bank of England raised the benchmark rate by half a percentage point to 3.5%, which is the highest level in 14 years. It was the ninth consecutive increase since December 2021 and follows last month's outsized three-quarter-point hike, which was the biggest in 3 decades. This time, officials opted for slightly less aggressive action after data this week showed inflation slipping from a 41-year high. But they warned that more hikes are likely to come. In an interview, Andrew Bailey, governor of the Bank of England, said that he expected inflation to start falling around late spring. But he warned that there was a risk this wouldn't happen due to the tight labor market.
We think we've seen possibly this week, the first glimmer that with the figures that were released this week, that it's not only beginning to come down, but it was a little bit below where we thought it would be, and that's obviously very good news, but there's a long way to go. And and we expect that to happen, by the way. We expect inflation to start falling more rapidly, probably from the late spring onwards. But there is a risk that it won't happen in that way, particularly because the labour market and the labour supply in this country is so tight. And that's why, really, we had to raise interest rates today, because we see that risk as really quite pronounced.
Well, obviously, it's an independent decision by the bank, and it reflects the situation that we're in. What's happened with Putin's weaponization of energy prices, essentially, over this year, has meant that we've seen massive challenges in terms of inflation pressures and the impact on economic growth. And we are united with the Bank of England in the determination to get that inflation rate down from now 10.7% down to the target of 2%, and they've taken that decision today. We recognise that this is really hard for people across the economy. Dealing with inflation and using interest rates to do that is critically important. Well, I don't think this is about going back over what's happened. We've got to deal with the situation that we're in today. We have high inflation. It has a corrosive effect across the economy to wages, to the growth imperative for people across businesses. We've got to get inflation down, and I welcome all action that the bank takes to do so.